With real estate prices so high, you might be wondering just how much cash you need to get your foot in the door of your new home. Well, spoiler alert, it might be less than you think. In this video, I'm going to break down the minimum down payments required here in Canada. I'm also going to discuss the differences between the deposit and a down payment and 4 creative ways to save up your down payment to help you become a homeowner faster than you might have thought possible. But before we get started, if you're new to this channel, my name is Glen Hopkins and I create videos all about Canadian real estate and my local market of Surrey and White Rock, BC. So if that's something that you're interested in, please go ahead, subscribe, hit that button so that you don't miss out on any of my upcoming videos. And also, if you'd like my help with either buying or selling a home here in the Surrey or White Rock area, there is a link in the description box below where you can schedule a call with me. And if you're anywhere else in Canada and you need a referral to a fantastic agent, don't worry, I've got you covered. I know amazing agents throughout the country that I will gladly connect you with. All right, so let's get into it. First things first, what exactly is a down payment? Well, when you get a mortgage, the down payment is the amount that you're required to pay up front. It represents a portion of the price of the house that you hope to buy. So think of it as your initial investment into your new home. A down payment is typically made with cash, and the bigger your down payment, the smaller your mortgage will be. And this means more equity in your home right out of the gate. So just remember that home equity is simply the value of your house minus the mortgage amount. And a quick note here, don't confuse your down payment with your deposit. Your deposit is what you put up during the buying process to show the seller that you're serious, while the down payment is part of the mortgage process and reduces the amount of the money that you need to borrow from your lender. Now let's talk numbers. And in case you're wondering, in Canada, you cannot buy a house without a down payment. Canada has specific rules around minimum down payments that have been in place since 2008. So here's the breakdown. For homes under $500,000, the minimum down payment is 5%. So if you're looking at a $400,000 home, you're going to need at least $20,000. For homes between $500,000 and $999,999, you need 5% for your first $500,000 and 10% for the amount above $500,000. So if you're buying a $700,000 home, you'll need $25,000 for the first $500,000 and another $20,000 for the remaining $200,000, totaling $45,000. Now for homes of $1 million or more, the minimum down payment jumps to 20%. So a $1.5 million home requires at least $300,000 down. Now there are times when you might need more. Not everyone gets by with just the minimum down payment. If you're self-employed or you have poor credit history, or if your monthly mortgage payments on your home are just too big for your budget, lenders might require a larger down payment to reduce the mortgage size and those hefty monthly payments. By the way, if you're getting any value out of this video, do me a quick favor, okay? Go ahead, hit that like button. It only takes a second and it really helps me get the word out to other people just like you who might benefit from this video. All right, so before we get into the 4 ways you can save up for your down payment, including the $35,000 tax-free option, you should know that if your down payment is less than 20%, you'll have to purchase what's called mortgage default insurance. Mortgage default insurance protects the lender in case you can't pay your mortgage. It is an added cost, but it can help you get into your home sooner if you don't have the full 20% down. So at this point, if you're like a lot of other people, you might be feeling like 5, 10, or 20% down payment is a big mountain to climb. I just want you to remember that although it might be challenging, if other people can do it, so can you. And really, all you need is a plan. So here are a few tips to help you save for your down payment and make it happen faster. First off, take a good look at your budget and see if there's ways you can cut costs. Maybe you can skip vacations for now or hold off on getting that new phone and think about driving a cheaper car until you've got the keys to your home in your hand. Now, another thing that you can do is pay off your debts. It's hard to save money when you're making monthly payments to your creditors. Plus, by reducing your debt, you're going to improve your debt service ratios, making it much easier to qualify for the mortgage that you want. You should also consider setting up a special savings account just for your down payment. That way you can automate your savings so you don't even have to think about it. And if possible, use a TFSA or a high interest savings account to grow your money even faster. And here's a real game changer. If you have an RRSP, you can borrow up to $35,000 from it tax-free for your first home. And that can make a huge difference in getting your down payment ready sooner. And you know, there's so much more to know about buying a home, including finding the right neighborhood, knowing the types of houses to avoid getting, understanding closing costs, and so much more. So make sure that you watch the next videos popping up right now on the screen to help you make the right home buying decisions. And remember to leave a comment below and share your thoughts and experiences, and I will see you on the next video.